in setting the trading plan are your goals, right? What are your goals, right? So, and I believe in compounding investing, right? So I believe in compounding investing. That means that, you know, you do have to be patient, right? But the way I looked at the trading, let's say probability of success is 75%. And this is true for, I'm trading S&P 500 stocks that have a lot of history. We have models that can predict their patterns, right? At least, you know, most of the time when market sells off, it sells off in very high correlation. You know, all stocks sell off in high correlation. You can see it now. You know, I think right now, 90% of the stocks, you know, the number of stocks hitting 200-day low, 200-day moving average is continuing to rise. The number of stocks hitting the 52-week high continue to drop, right? So you're going through the dynamics, right? So usually during market correction, most of the stocks sell off in high correlation. But most of the time, as you have seen, market is in an uptrend, right? 90% of the time, market is in an uptrend, and that's when the model can find find the patterns. So those are the stocks I'm trading. So I'm 75% accurate, right? Obviously, I don't trade IPOs, you know, well, I don't know. You need to be maybe, I don't know, let's say you're 10% accurate. But the same logic applies, right? If I'm 75% accurate, right, I basically say I do 4 trades, right? Or if I, so this is S&P stocks, right? This is IPO stocks, or anything else for that matter. It doesn't really matter. But you know, in IPO stocks, you're not going to be 75% accurate. Otherwise, you know, you would not be on this presentation. But you could be 10% accurate, right? You could be 20% accurate. But the logic is, if I'm 75% accurate and I do 4 trades, then 3 would be successful, right? And 3 would be unsuccessful, right? Let's say when I start trading, I'm going to be conservative. At least I'll try to be conservative. So I'm going to look for 0.5% gain, right? If I do day trading, I'm going to do 0.5% gain. If I'm holding position for a week, maybe I'll do 1% gain. But let's say you're doing day trading, 0.5% gain. 1 trade, you stop out at 1% loss, right? 3 times 0.5 overall, you made 1.5%. You 1 trade stopped out, you lost 1%, right? So you net, you're 0.5% up, right? So you want to consistently, when you start trading, at least for a few months, you know, you might have 1 week where all 4 trades will go against you, but you might have 1 week where all 4 trades will go in your favor. But on average, over a long period of time, for the next few months, you want to be consistent and try to make at least 0.5% a week, right? If you're doing short-term trading, right? 0.5%. If you do weekly trading, you have 4 trades, same logic. You know, maybe 3 trades, you made, you know, 1.5% gain, and 1 trade, you know, you lost 2.5%. But you want to be consistently making money. In 1 week, 0.5%, right? If you can make it in 1 week, that means if you do this consistently in a month, that will be 2%, right? Multiplied by 4. And if in 1 year multiplied by 12, 24%. So if you can consistently make 24%, I know S&P this year is up 24%, so that might not look like a lot, but you know, next year S&P is projected to be up only 10%, and you know, it could be actually down, you know. So if you can consistently make 24% without taking a big risk, and keep your size small, like we outlined today, you can make 24%. As time goes on, you do more, you know, you just do more contracts, right? This is, assume that this is, you do 1 contract, or you do 100 shares, you know, or you allocate always the same amount of equity, right? You know, maybe $5,000 per trade, maybe $1,000 per trade, depending on your account size. But this is, you know, you do 1 contract, or you know, you do increments of, I don't know, $1,000 investing into every stock, right? You invest $1,000 or $500, depending on your size. And then if you want a high return, all you do is, you know, You either have more position, you get diversified, and from 4 you grow to 8, or you do 2 contracts, right? Or you do, you can do 4 contracts, right? Grow to this number to 4. Then this will become 2%, right? This will become 24%. If you do 4 contracts, then it'll be 4 times this. This, 2% multiplied by 4, this will be, 8%, and this would be 96%. But before you jump to do, instead of 1 contract, doing 4 contracts, or instead of 4 position, do 8 position, I encourage you to go through at least few months of these iterations and stay cash flow positive, especially when the market is overbought.